It's been 3 or 4 years since we've seen oil this bearish and this many people down on it, and glad to be with you here today. And it reflects every bit of pessimistic information you could imagine, including Chinese shunning our oil for a while for trade leverage, and also a perceived glut that may occur next year. I think that the Permian Basin in West Texas may self-correct that because producers are out there aren't making a whole lot of money. And I would put the China situation in a more holistic context, because the U.S.-China rivalry isn't just about trade, and it's not just about economics. It's about global power in general, whether it's the South China Sea or the influence on other countries in Asia. And every single tool in the toolbox that the Chinese or we use is designed to improve our advantage or their advantage globally vis-a-vis other countries and vis-a-vis each other. And I think the grim reality for the Chinese is they desperately need an awful lot of oil the next 10 to 20 years, and U.S. supply is the most stable, the most reliable, and the most undergirded by ironclad contracts. So they're going to have to come back to us at some point, but in the meantime, they're probably going to posture and use that very big economic chip as a bargaining tool.
So while long-term China may need U.S. oil, we are seeing these tensions escalate between these two countries over the last week or so. What's the base case here in terms of how that's likely to put a cap on oil prices or the gains that we've seen?
I think trying to call the oil markets or the natural gas markets is about like trying to call the weather or interest rates or when the next recession is going to occur. Everybody was pretty bullish about 2 weeks ago when oil was flirting with $60 again, and now that we're down in the low 50s, everybody's incredibly bearish. So I'm not quite certain in the short term where the price of crude is going to go, but I think if you look 2, 3, 4 years out with how little capital expenditures have been made outside of the shale plays in the U.S., we could come into a real supply crunch then, but in the near term, who knows? And we're likely to see a lot more volatility on the downside and the upside. The good news for the U.S. is oil prices are significantly lower than they have been in the past 5 to 6 years. We're basically at the same levels we were well over a decade ago, which is great for the U.S. consumer. So I think that as long as we stay down here, it's really good for the U.S. and the economy in general. But it's kind of a self-correcting mechanism. If the producers don't get a price by which they can make profits, the supply is going to start shrinking, and the price will go up until they can actually make enough money to continue to pull it out of the ground. We're probably range bound between 40 and $80 a barrel for the next couple of years, and after that, who knows?
So, as you point out, the lower prices have been a good thing or positive for U.S. consumers, and yet now you've got the Saudis making some noise, saying that essentially they will do whatever it takes as they've seen the price of oil slide there. Your thoughts on a potential production cut from OPEC later this year?
I think the Saudis have to have a higher price for crude to meet their incredibly generous public budgets they have to do to support their population. What most people don't realize is there's a lot of the Saudi population that is relying on the government to fund them, and they tend to be very generous in what they give out to their citizens. So they have a tremendous incentive for oil to go higher. And I think one thing that people on the coast don't really appreciate as well is that with the shale resurgence, it's not a simple question anymore about what's best for the United States. For our country, a price of oil that's sustainable and supports those industries, which have created hundreds and hundreds of thousands of jobs in the last decade. Actually, we need a little higher price of oil to net benefit our economy. So we're a little low right now, but if you get up into the $90, $100 barrel range, it's bad for the economy. So we need to somehow stay in a $55 to $75, $80 barrel range for the net benefit of our country, and we're below that now. So it needs to go back up at some point. But these things tend to swing wilder and longer than people can imagine. So we'll just have to see how it plays out.
Okay, George, we're going to have to leave it there. Appreciate your time today.
Glad to be here. Thank you.